Welcome everybody, welcome everyone that's joining. Thanks a lot for coming in. We're going to give it a couple of minutes to allow people to get in before we really kick off. We're actually going to be running a few polls as well throughout the discussion to keep everyone interactive. And actually, Tom, who's our head of marketing here at Altus Partners, I think is going to go live with the first poll while we wait for people to join. So the first poll just gives us an idea of who is joining us. So the first question is, what best describes your profession, as you can see? So wondering if you are already an established FD or CFO or looking to become an FD or CFO. Are you involved in private equity or venture capital, for example? Are you a founder, a CEO? Or, I know it's quite vague and a bit broad, are you a consultant? So that's just going to give us a feel for who's actually coming in and joining us today. But once again, obviously, thanks everyone for joining. We're really excited to start the latest event. And if you are joining, feel free to drop us a note in the chat. Let us know you're here. Let us know where you're joining from. I can see you've got about 45 people in, which is good so far. I think we're almost ready to kind of kick it off properly. And I think, Tom, you can keep us updated with the results on those polls.
Yeah, we're getting there. So we're getting some good responses in so far. We'll give it another 30 seconds and then we'll share the results.
Sounds good. Well, look, we might as well start. So yeah, once again, hello, everyone. Thanks for joining us today for our latest live event, The Route to Exit. My name is James Clow and I work within the portfolio team at the London-based executive search firm, Altus Partners. So I specialize in partnering with CFOs across Europe, building best-in-class finance and strategy teams that help investor-backed businesses achieve high-profile and high-return exits. And today I'm excited to be joined by Steve Tinkler, a successful CFO with an outstanding recent track record in doing just that. So Steve, I don't know if you want to introduce yourself properly and give everyone a bit of an overview into your background.
Yeah, sure. Thanks, James. And hi, everyone. Really glad to have so many people on the call. I'm excited to talk about everything we're going to cover today. So I guess, yeah, really quickly covering my background, and I'm sure there's going to be various bits we'll dive into in more detail. But so a relatively typical route, I guess, in terms of the CFO track that started with one of the larger accounting firms in audit. So I worked for BDO. I initially planned to spend 3 years there. I spent almost 10 years in the end, but it was a fantastic experience. So started in audit, did international secondments, worked in Manhattan, Sydney, ended up working in corporate finance, and so spent 3 years or so there. And that's kind of where I first started getting more exposed to kind of working on exits and, you know, just captivated by this lovely adrenaline rush of doing it. But wanted to be part of businesses and actually doing it inside the company. So then sort of the second half of my career, I've done exactly that, and kind of a mix of roles, which I'm sure we'll kind of go into in more detail, but kind of various ones of high growth environments, very clear kind of view that we're coming in to grow and scale the business. And then very recently, I've then sort of actually started my own business, helping specifically games companies, but find investment and sell their businesses. And so again, that's been really interesting, just seeing a real mix of clients. So kind of, yeah, over the past 20 years, seen a lot of companies go through what we're going to talk through today.
Brilliant. Yeah, we'll go into a lot more detail as we go along. I have a feeling actually that the chat might be disabled, so we might need to just quickly fix that. But in the meantime, you'll see actually we posted Steve's LinkedIn profile for everyone to have a look at to get a feel of his experience. So feel free to have a look at that. But basically, the purpose of this webinar will be to give people a rare and valuable insight into the exit process, how Steve became a CFO. We'll be discussing Steve's experience working with PE funds such as Synova and what the experience has been guiding high profile exits with the likes of Mediatonic. So we're also going to be interacting as much as possible with the polls throughout the discussion, and we'll have a look at the results of our first poll in a minute. And actually, Tom, the head of marketing here at Altus, is just going to briefly describe another way that we're hoping people can interact via Twitter.
Thanks, James. Yeah, so we're continuing the conversation online today. So if you head over to Twitter and search for Altus Partners, I'll put the link in the chat in a moment. And you can use the hashtag route to exit to add any comments or thoughts or questions about the conversation today. That'd be brilliant. And yeah, I'll share our LinkedIn profile in a moment, and feel free to follow us to connect with Altus Partners online. So we'll hopefully get the chat up and running in a moment. But in the meantime, we've got Twitter and we've got the Q&A section as well if you have any other questions.
Awesome. Thanks, Tom. Tom, are we able to see the results of that first poll, actually?
Yeah, sure. 1 second. There we go.
Right. So it looks like we've got some FDs and CFOs, a good mix, actually, of people looking to follow that journey and actually become an FD and CFO, which is great. Some involvement with PE, venture capital. We've got a few consultants. I wonder if they're sneaky recruiters watching along as well. We'll find out later. Cool. Well, that's great. It gives us a good idea. And the fact that there are some people here looking to actually go on that journey to becoming a CFO or an FD leads us quite well into our first discussion point, which is actually just going to be around Steve's background. So he briefly mentioned, obviously, he started at BDO, but it would be great to hear how that journey evolved and what choices he made down the line to actually getting into industry and going into that kind of PE environment.
Yeah, sure. And so, yeah, I guess kind of touched on sort of the time at BDO, and like that was great, broad experience. Kind of you got to work with lots of different clients and kind of broad skill set, and kind of in sort of the corporate finance element as well. It's kind of almost, for people that know, it's kind of audit on steroids, that kind of much more intense, but it comes back to that discipline of kind of really making sure you understand your numbers and you've got the basics covered. From my point of view, great experience, but it was just one of those that I kind of always knew that I wanted to be within a company and just kind of be on that journey. And sort of like corporate finance, you'd effectively start with working with a new company. You'd have a really intense 3 or 4 weeks where you'd know the business inside out. You'd come away with a 100-page report. It's like, this is how the business works. These are potential risks. And then you'd never see it again and go on to the next one. I was kind of like, I want to stay on this journey. And so that was really sort of the driving point to sort of move across into industry. And then it's kind of, it's one of those natural projections that you want to keep getting promoted and go up, and CFO is naturally one of the focal points where you go to. I actually moved across into industry and became a group financial controller initially, which again, that was interesting, sort of relatively senior role, having never worked in industry before. So I think I had a team of 17 people, and wow. I'd never posted a journal or raised a sales invoice. I'll be honest, I didn't know exactly what I was doing initially. And so you kind of have quite a steep learning curve, but I was fortunate. I had a fantastic mentor in the CFO who was there. And so quite quickly kind of get to learn actually how things really work. And it's quite different from seeing an audit, but actually just having that base there is fundamental. And again, sort of, I know some people perhaps have come in sort of at the stage later and not done that financial controller point of view. But for me, that's fundamental, just to know the basics of everything and just kind of seeing how it all fits together, from the sales ledger team that are raising sales invoices to the system team doing kind of tech rollouts and that sort of thing. So that was a great point. And so I'm really glad that I did that part as well.
Yeah, no, absolutely. Because I guess there's a couple of different routes that becoming a CFO can go down. You can go down that traditional audit route in a top tier audit firm, or maybe come through the likes of a Bain or a BCG, for example. So there's different avenues you can take, obviously. But it's interesting, obviously, that you've been at BDO, were at BDO for a while, and then got that high profile role straight off the bat coming into industry. And I'm sure that set you up nicely, actually, to move into what was originally Ember as a fully fledged CFO. And, it'd be great to understand the journey with them. I understand, while you were there, you saw that the team grow massively, for example, lots of changes with the company, and actually delivered a high profile exit for them. So I guess what would be good to understand when joining a project like that, do you come in with that specific focus that the exit is on the horizon? You've got a specific investment cycle in mind, for example, and how do you go about doing that? For example, is there a 100-day plan when you first join? Is there a 2-year plan? How does it work?
Yeah, it's a good point. And perhaps just to give some context to the business as well. So the place I was at before Ember, we were in 15 different countries, and sort of, it was quite a large company, which is again great for this grounding experience. I guess I wanted something sort of earlier stages. And so actually I kind of went from a very secure, stable business, which was growing still, but it was kind of like there was established processes, to a 20-person startup. So it was actually yeah, it was all to play for. Like, they've been running for 7 years, but they've been founders have very much got to the point of, we need to scale this business and we want to grow and we want to exit. So to your question, there's quite a clear plan that they're saying, look, over the next 3 years, we want to significantly grow and then we will sell the business, which is quite a nice way to go. And it was also just really enjoyable that coming in at that early stage, there's a whole load of things that you can change and have an impact on. And when you sort of say, with the traditional CFO role, it's kind of CFO, CEO, you name it, kind of head of HR, head of finance, IT. But again, that's great. And I think kind of a key part of that was then being fundamental in other CFO roles I've done, that you have to understand every facet of the business. And so you can put your arms around everything. You're not just in a silo looking at something financial, because the key to being a successful CFO is really understanding the commercial drivers of everything happening in the business and being very operationally focused as well. So it was great sort of starting on that point. I guess just in terms of what you mentioned, like the 100-day plan, and yeah, I guess there's people here who might have private equity experience. Like, that's quite a typical question when you're getting interviewed and kind of being quite clear and articulate on what the plan is. And well, actually, I guess I'll be honest here. Like, so I learned the hard way on this way as well. I'd come from a much larger company and I had these grand visions that I was actually going to provide real insight that the business had never had before. And this is something that's stuck with me since. I forgot the basics. I was so kind of focused on this will drive so much value to them, that actually some of the fundamentals of running an early stage business is actually cash. And so it was 2 months into me being there, I previewed this lovely thing, which everyone responded well to, but it was just before Christmas. We had our annual corporation tax bill, we had our VAT liability, and we had annual salaries. And it turned out we didn't have enough cash and I wasn't aware of it. And I was very early into my CFO career, and it was almost a basic that I look at now, I'm like, how did I not do it? But it's probably one of those things that when you come to a 100-day plan, is the first of all is like, make sure you get the basics right. So kind of, and typically what I do is kind of, start with it's just listening, understand how the business works, but then get that foundation right in terms of, having all the infrastructure set in place. Because if you're clear of the view, okay, we're going to grow this business. And so what we did, it was 20 people, we grew to 100 over the space of 3 years before selling. Like, we know we're going to scale, so let's get everything right to start with.
Yeah, absolutely. And I guess that drives you towards that exit eventually. And I guess this is probably a good time to actually introduce the second poll, which is more focused around the current audience's actual understanding of what an exit process is. So there's a few options. Have you been through an exit as a CFO, CEO, etc.? Have you been through it as an advisor? Have you not been through it, but you have a broad understanding of the process? Or, D, finally, is this all just jargon? Is this all new to you? And if so, it might give us an opportunity to actually explain a bit more about what that actually entails. I guess attached to coming in and assessing the situation with the current business, did you have to go through a particular restructure with the team, with how the business model was set up potentially, and what were some of the challenges that you faced, and how did you solve that?
Yeah, I guess probably most places I've come into, you're being brought in for a reason, and kind of you've got a quite clear vision that you're going to be fundamentally growing and changing the business, and therefore things do have to change. And so often, which comes with it, you're resetting most things, and so you want to make sure, I guess, core from the finance perspective, that you have a finance team and systems and structure that's going to be set to scale. And so that's from people being bought into what you want to do and kind of shared vision of this and being quite adaptable. You've also got to have people that are quite useful at helping change in the business, because people are going to be resistant to it. So you're coming in and you're talking about all these great ideas, which may be great and clever, but if people don't like the sound of it, or they're for some reason threatened, that doesn't really work. So there's a sort of a key point in terms of get the people right, get the infrastructure right, and then make sure you're bringing other people in the business on the journey, because it's not just about finance. Typically, the finance role should be embracing everything. So again, if you're sort of quite an operationally focused CFO, so it's bordering on COO, like there's a fundamental part there. So that's kind of, if you get those points right, you're setting the business up to scale, which is ultimately leading it to the exit. And again, what you want to do is get best practice in place, that when it comes to sort of people absolutely going through every single financial record and everything you've got and doing quite detailed due diligence, that you are confident that you not only have, no red flags in terms of historic issues of HMRC, but you actually have really great insights and reporting. It just gives that confidence. And so kind of that was a key thing that I did very early on, was get a great team in place, get the great systems in place, and then make sure the reporting is there. So the insight that I mentioned initially came very valuable after that point. And so kind of when we started DD, so the people were blown away by saying, oh, actually, you have all this, like you're only a 100-person business and you have all this insight. This gives us a lot of confidence. we know you run your business, and actually when we're overseeing it, we will get the insight we need.
Yeah, I mean, I understand that it's a case of you have to not be scared to come in and potentially ruffle a few feathers as well. You know, you've been brought in with the responsibility to deliver, you know, a high return at the end of the day. And if there's certain things that aren't working, you have to, you know, have the confidence to come in and challenge current practices, for example. So, yeah, I understand that not everyone enjoys it, and obviously, you know, there's a specific focus on that investment cycle, but it's about getting the best out of the team and getting the best out of the business ultimately.
Yeah, I think the really important thing is that you're aligned with the CEO. Like, I think that's kind of both places, like the last two places where I've exited. Like, you're going to be doing some things which aren't nice, they're difficult, and they're going to be changed. But as long as you and the CEO are aligned, and you're going to have different opinions at certain points, but you kind of need to be working together. And so that's kind of key. And provided I've had that backing, it's much easier to then do the various changes you need to. Yeah,
absolutely. And interestingly, when looking at your profile, you can see that in both Ember / Davies and Mediatonic and Epic, which we'll come on to, you've also stayed on for around a year after that actual process has happened. So, you know, creating that partnership is obviously very important, not only for the process itself, but actually for, you know, post-exit, so that you can settle the business down and make sure that when you do eventually leave, you leave it in the best way.
Yeah, and that's been really fundamental to me. But both times I've been asked to take on a larger role with the people acquiring us, and that's kind of like quite a nice testament. It's almost like what I then tell the finance team, like, let's aspire that they look at everything we've done and go, actually, we want more of this, rather than sort of say, we want the business, but we're not really interested in the support functions. We don't need you. And so always my teams are then being brought on and given bigger opportunities.
Yeah, absolutely. Just quickly before we actually delve into the Q&A and chat at the end, there's a couple of questions that have come in already, which might be interesting to touch on at this point. So in the Q&A box, Richard has asked, on having people that are agents for change, what roles have you found most useful to achieve this? So whether that be in finance or in commercial strategy, etc., or operations, who have been some of the key stakeholders on this journey that have helped you?
Yeah, I guess it depends on the nature of the business. And so, for example, sort of like the last couple of roles in games as well, you'll have certain roles that are kind of quite fundamental, and it depends on the nature of the change, but typically it's quite operational. So there's certain things which can be siloed around finance, that you're doing certain things and you're working with the PE firm, and that's fine. You can come up with these insights. But if you're really wanting to scale the business and drive change, it's kind of more that operational angle. So kind of whether there's a COO there or someone in an ops role, or within games, you typically have a production director or someone who's kind of overseeing each of the games. Like, that's really key. And sort of some of the fundamental areas, like there's a whole commercial piece of like how to become more profitable that typically is much easier for a CFO to own. But when it comes to people, you're across a much broader cross set of people. Yeah. And it's like thinking about, okay, recruitment is fundamental. You need to bring on these people. How are we planning for that? And are we on track on it? And kind of how can we make that process as easy and seamless and also consistent? Because, you know, invariably what happens is people get busy and then they don't hire and they forget to do it because interviews are really time consuming. So how do you partner with them without it suddenly being like, I'm the CFO and I'm on your back and every week we're talking? It's much more, let's understand what's going on. Are there better ways to do it? But even just creating that mechanism of, we're checking every week, we're checking every 2 weeks to see where the key roles are, what's happening. So you have certain things like that, but there'll be certain influential people on the more ops side that can really drive that people change. There's then just making sure you've just got really good people across that management team. So shortly after I joined Mediatonic, which we'll come on to in a minute, but like bringing in a really good GC, bringing in a chief people officer who are aligned with the vision, who are very experienced in what they're doing and know how to bring people on the journey, particularly in somewhere like Mediatonic where culture was so key. It's kind of like, well, actually, you can't just crowbar and push this thing. Like, people need to be bought into this vision.
Yeah, absolutely. I guess it'd be good then just to touch upon the actual exit itself with Ember. So for those who don't know, obviously Davies Consulting acquired Ember, and that was obviously through the Silicon Valley-based PE firm HGGC. So it'd be good just to get a bit of insight as to how that went and kind of what were some of the financials behind it, if you don't mind kind of delving into that a bit as well.
Yeah, sure. So kind of, so we didn't have a structured process from this. It's quite interesting. We had various people reach out to us throughout those 3 years, and it was just, we weren't of the view that, you know, the financials were a point which matched the valuation that we wanted. And so you typically have these, you know, half an hour calls with people and you see where they go. It was actually sort of, it was, like I said, it was just before sort of, I've been there for about 3 years. I was involved with project work as well. So I'd often, if we had new partnerships, I'd just be in those meetings as well. And we kind of went around the room, and there's suddenly the head of M&A and the MD for a certain division, technology division there. I was like, this sounds interesting. This is going somewhere else, isn't it? And so we didn't run structured process. We said to them, we're like, let's talk and see where we get to. Often, like, you have to be very careful with this, but they kind of asked for some numbers, and so like high level numbers, let's just see what you're talking about. And so kind of gave some actuals and some projections for the next couple of years, and said, like, give us an LOI, give us an offer. If it's interesting, we'll talk. And then kind of, obviously there's negotiations around that, but we got to a point where, like, we are happy, this doesn't, this could work for us commercially, let's go into a process. And so we started from there. Just given the size of the business, like I said, it was 100 people, so we're not talking huge numbers. We didn't get an investment bank in. I ran the process, which was fine and fascinating and really interesting. And kind of collaboratively worked with them through that process. But so you start out with due diligence being quite intense. You also have, a share purchase agreement that kind of, there's some heads of terms initially to make sure the fundamentals, the commercials are there, and then kind of go into, to the extent people understand it, I can explain more, but like a share purchase agreement, which is the contract to buy us. And so kind of that process run through from there. We didn't have investment bankers, but I recommend, was absolutely key, getting really good lawyers that kind of, I've got a broad legal understanding, but it's very different to actually knowing how to win an argument in terms of legal drafting, and then very good tax advisors. We had a really complicated issue with EMI options, which could have scuppered the whole deal basically. And so you can never plan for it. You kind of, on paper, it looks fine, but there's always going to be 2 or 3 things that come up, which are very stressful, and you just need to kind of work your way through those.
Yeah.
But ultimately, it went relatively well. It was great, actually. We had EMI options for all employees, so it was a really positive event where we could announce it, and then someone say we've been bought and this is our new home. It's kind of, so yeah, it was a good process.
Brilliant. I guess it's good just to touch on that second poll, Tom. I don't know if you can bring up the results. What people's understanding. So we've got a few people who've been through an exit as an advisor or as a CFO, CEO, etc. People with a broad understanding, and there's a few who have no idea. So hopefully there's a few less now who don't have any idea what an exit is, and hopefully that's gained those who do have experience a bit of insight into how it went down with Ember and Davies. I guess it brings us on to your next role, which was with Mediatonic, and the high profile exit alongside Synova to Epic Games. So for those who don't know, Mediatonic and Epic Games have been 2 of the most successful game publishers and producers over the past kind of 5 to 6 years. We've actually got a poll quickly, the last poll, to see what people understand about gaming. So Mediatonic created Fall Guys, and Epic Games are the creators of Fortnite. If you haven't played them, your kids probably have. I must admit, I'm guilty. I've played both. So that would be my answer. But as those polls come in, Steve, it would be great just to have an overview of what Mediatonic was when you joined, and what that kind of mission was when you first stepped through the door.
Yeah, sounds good. So it was relatively shortly after the Ember sale. I think it was about 6 months after, and I just got approached about it. I didn't know the business before, but I was just blown away by them, sort of my first few meetings. So they just received private equity backing from Synova, about 200 people at the time. But again, kind of, it's a clear expectation with PE investment that at some point there'll be an exit, probably in the next 3 to 5 years. We want to grow and we want to scale the business. This is probably getting more into the games industry, but it's probably useful context that sort of the strategy was changing quite a bit. So what has historically been it's called a work for hire model, but effectively like a consultancy that you have people developing games for other people who own the IP. There's more of a pivot to actually creating our own games and our own IP. And it's actually, in my third interview, they were doing like a 100-person play test of this game, Fall Guys, which was 18 months before it launched globally. I was like, wow, this is really fun. And we're like, yes, we know this. And so you suddenly came and you realize that there's like this incredible thing on our hands. And it was almost like, well, okay, we're going to scale the business. And so we went in the space of 18 months from 200 to 400 people. So it's kind of exceptional growth and a whole load of things as well, professionalizing the business. So they had been going for 15 years, but they'd had, like, I guess, relatively standard, but they had VC investors who probably didn't need a lot of information. Suddenly having a very well-regarded PE firm who's, you know, our board report went from 2 pages on Word to a 70-page document, which is very visual and very kind of KPI and drivers driven. And so there's a whole load of piece around that. I can almost talk about that, but kind of, yeah, the whole point was kind of like, we are going to scale this business. We know we've got this incredible IP with Fall Guys, but if it's not Fall Guys, there's other things we're doing, because we're now got the backing from Synova to actually invest in our own content. And so, yeah, it started from there. And then we were, I'd say, fortunate. Yeah, I think we're very fortunate in terms of how well Fall Guys did, and sort of that then took us to the next level.
Yeah, I mean, speaking personally as someone who does keep their eye on things like YouTube or Twitch, for those who don't know, Twitch is the biggest live streaming gaming website in the world. There was a period in time when Fall Guys first dropped, where it was kind of #1 ranking on Twitch, for example. All of the top creators, all of the top streamers were playing it on a regular basis. And I'm sure that gave it kind of, you know, invaluable exposure on a scale that maybe even you guys might not have imagined.
Yeah, it was, well, it's kind of the perfect storm of many things. And like, again, for context, it came out in August of 2020. So we're in peak lockdown. So if you think just the amount of people at home playing, or just at home, it was also, this is more specific to gaming, but it's kind of a different take on Battle Royale. So it's very accessible. So rather than you might have something like Call of Duty, which is kind of you're shooting people and there's blood and kills, this is you run across an obstacle course with a blob that looks like a jelly bean, and it's kind of very friendly, it's very easy tools, and so kind of it appealed to a wide audience of people as well. And then there's just certain things that you mentioned, like on Twitch, and so certain streamers just jumped on it and they really enjoyed it, and so suddenly there's a whole load of visibility. And so I have to be careful what I can and can't disclose, but what was, you know, publicly available, we announced after 3 weeks of the game being live that it sold 7 million units, and so each unit was sold for $20. You know, suddenly like that was just kind of like exploded. And for context, when I joined, the EBITDA was about £3 million a year. So suddenly to go to this level, it really did blow us. Like, we were the most successful PlayStation Plus game ever, you know, so it kind of, we knew it was fun and good, but we had no idea it was going to go as well as that. So it then suddenly put us in this completely different world where we sort of, you know, we're being talked to with like the largest, most exciting games companies and technology companies in the world.
Yeah, no, absolutely. It's almost unprecedented, I think, how quickly it exploded. I mean, I personally, I'm on Xbox, so when it first came out, I had that barrier. I couldn't actually play it, and I was also in lockdown, so I couldn't go around to my mates and play it either. So you had to settle for the streams, which nonetheless was still really fun. But I think it had an appeal that, even though potentially visually it might be associated with the younger market, you know, you had adults who were actively playing it. And actually, I think it was quite recently that the cross-platform came. I downloaded it straight away, and I wasted quite a few evenings on that after work. I'm still yet to win a game. I've got a colleague who's very proud of his few wins that he's got. Nice. And he, you know, just to reinforce that point of how it is something with mass appeal. I think he mentioned, you know, he's a 30-year-old man, and all day he's just been thinking about playing Fall Guys. So you know, it really did have that spread of audience. Yeah. So I guess what would be interesting to understand is, when scaling that quickly in the way that you've described, what were some of the things you had to put in place to actually facilitate that? Because I can imagine you can kind of get caught up in this whirlwind and once again maybe lose some of that foundation, or lose touch with some of the more operational things that you described when at Ember.
Yeah, I guess kind of starting with kind of like the more core to the CFO role, is like similar point to Ember, kind of like those first 100 days, it sounds like a cliche, but like really key in terms of, first of all, like just make sure you understand the business. So kind of really talking to people and understand all the different drivers. So kind of, we kind of conceptualize, okay, this is what's important and this is how we should think about it. So it's everything from, I guess, investor reporting. So, okay, these are the drivers. And so we can sort of furnish that, how much that actually drives business decisions, kind of TBC, you know, it's kind of like, it's definitely a part to it, but there's probably some more practical stuff that needs to be done as well. Sticking with the core financial side, so kind of making sure that, you know, we are surfacing the right data and kind of have like a really clear financial model that's underpinned by the right drivers, but then also just making sure kind of the systems and people and processes all in place that actually, if this is suddenly going to go from 200 people to 400, like this is all as automated as possible so that kind of we can accommodate this. And as we're wanting to change things in the business, we can speak to people in the company and make sure that they're on board with the change. So kind of that first like 3 months or so was really key in making sure we understand it, making sure we can then translate that vision strategy into financial numbers and share that with the board, make sure then there's investor reporting, and then make sure the team is being built out. And so actually, and again, that takes time to do. And that's kind of like, you want to make sure that you fully understand stuff before you're making huge structural changes, but kind of that you've got that infrastructure in place.
Yeah, absolutely. I mean, as the success continued to grow with Fall Guys, did you start to see, for example, more involvement from Synova? Did you start to see a very clear roadmap towards the exit? And as that was starting to build momentum, what were some of the things that you had to do to actually kind of, make the business attractive for potential buyers?
Yeah, so I guess starting with Synova, they were fantastic investors from the start, and kind of like, I guess beforehand I was almost anticipating that, kind of they're quite active initially when they first invest, and then kind of just leave us to it, and then there's an exit. But throughout they were kind of there. We'd have weekly calls, but like very practical, sensible. They want to know what's going on, but they're not interfering in the business. So that was great. And I guess even after the game like launched, there's still like very sensible discussions about what's the best thing for the business here. So kind of like, so things didn't fundamentally change, but naturally we worked very close with them, kind of particularly when we came more to that exit point.
Yeah.
And then sort of as it became clearer that we wanted to bring on a partner, as in someone to help us make Fall Guys as successful as possible, and so therefore enter a process, we've done a lot of work beforehand making sure the business is ready for that. And again, like I mentioned, like I brought in a very good general counsel, so a very experienced games lawyer who came in and just got the house in order for the 12 months before we started anything. The financials were in a good place. You kind of have everything there. There's then a big piece of work about, okay, we have this new game on our hands that nothing's done anything like this before. How do we forecast this, and how do we build out like a vision for the next 3 to 5 years? Because that's going to underpin the valuation when we start talking to people. So that, there's a big piece of work around this. But it's kind of, we got that in place. Again, absolutely incredible lawyers. So when we actually, we went into a process, we made sure we had these great lawyers who've kind of got a lot of experience with kind of high profile tech exits. We also had a US investment bank who had good relationships with Epic and others that sort of were supporting us on the deal. And so you kind of made sure you had good advisors in place, and then kind of we were set from all the work we've done previously.
Yeah. I mean, it must be hard juggling the likes of Synova, but also the CEO and the founders, and also the potential new investors or the big business that's looking to acquire you. How do you go about mitigating for that?
Yeah, like I was very fortunate that like the founders of Mediatonic are just incredible, and anyone who works in the game industry will know it. And so like they are just exceptionally switched on and personal people, and Synova are great as well. So kind of there's probably less of that where previously you might have stakeholder management and things like that. So that was fine from that side. It's just the fact you were going through a process, and so it's mentioned some people haven't been through a process. Like it's intense. Like there's no changing it, right? It's still on. Like we actually signed an LOI, so the letter of intent with Epic on Christmas Eve. So I remember coming down to my wife and going, "Good news, there's an LOI signed. Bad news, you're not going to see me for the next few months." And so it just has this intensity that you're working 16-hour days, and luckily we all got on very well. And so because you were talking to these people a lot more than your family for that period of time, and so that's great. And again, what's really important, sort of, I've found as being a CFO, the people trying to buy you are not the enemy. You're not having an argument with them. You're going to have some very robust commercial negotiations, but you're going to be working with them in a couple of months' time. And so actually really building those relationships. So kind of the all parties calls. So again, typically how it works, or how this worked, was we would have every Thursday kind of all parties on Epic side and our side with advisors, where it's kind of like, where are we? Are we on track? You're not getting into arguments about what's our view on this versus that, but making sure we're in progress and keeping those as civil as possible. And kind of, again, it was really well managed from Epic side as well. And kind of that, it was clear that we wanted to work with them, not just because they were the right partner for Fall Guys, but actually just generally there was a good alignment. So that was key. It was more just trying to stay on top of so many things. And there's like a deal of that size, there are so many things that that is a complex deal. And so there's lots of things you've got to try and navigate. And so trying to stay calm in those situations, that was the biggest piece, basically.
Yeah, no, I can imagine. And you've alluded to the kind of the size of the deal and kind of the scale of what we're discussing here. And I think people might actually lose sight of how the business model actually operates with something like Fall Guys or Fortnite, of course, you know, by Epic Games. And it's all to do with microtransactions and things such as this, if I'm not mistaken, because these games are actually free to download.
Yeah, so Fall Guys was slightly different in terms of it started off, it's now free to play. It was originally, it's called a premium game, but yeah, so you can buy it for $20 and then you can buy stuff in the game, and kind of then sort of something which is more your free to play model like Fortnite. You know, it's completely free, anyone can play it, but then there's things that you can get greater experience. So whether that's something like a season pass, so you get more content through that, which comes out each 3 months, or yeah, you can kind of dress up as a different, you know, have your avatar in this different skin, something like that. So there's different things, and so kind of, yeah, you monetize that. But you know, these are like Fortnite is probably the most successful game in the world globally. It's huge. Yeah.
And you actually mentioned something we were speaking before about how it was quite a natural marriage between Fortnite and Fall Guys, because both of these games different to how maybe Call of Duty is marketed, where you said, yes, you just kind of run around shooting people, there's blood. These games are more kind of cartoony in style, and therefore maybe visually are kind of easier for the younger audience to pick up. But you mentioned it's kind of as if Fall Guys was the first game, and then you'd naturally, as you got a bit older, maybe try Fortnite. So to bring them under one group at Epic seemed like common sense.
Yeah. It's kind of, I guess for various reasons, like Epic were just a great home. They've basically been through this with Fortnite previously. Yeah. And then, yeah, there's various rationale for them to sort of have it. And kind of just, again, they're still CEO founder led, and so kind of like there's certain things that kind of just really neatly aligned with us, and so yeah, it was a great home to go to.
Yeah, absolutely. So you stayed on for a while after. What were some of the changes that you noticed from, you know, the days maybe when you're a year, 2 years in at Mediatonic to when, you know, the deal had been done, you were now officially Epic Games? What were some of the changes, and how would you give someone a bit of you know, helpful advice towards making that transition?
Yeah, I guess it's so each acquisition is going to be different, but it's definite that it will be different from before, most likely, unless you're really very much a standalone entity. And I guess kind of typically for the ones I've been in for the broader business, it's kind of doesn't have loads of impact, but I guess being mindful of the CFO as a central function, if you're going to part of a much larger organization, there could be some changes. But for me, I actually, because I moved across and joined their strategic finance team pretty early on, the role was fundamentally different, but it was kind of like, it was almost like my old role was, you know, I was leaving that for something else anyhow. And so for me, that was really interesting. So I was kind of, my role was like looking at M&A, so working with the corp dev team, but seeing it from the buyer side, which was great, as well as then looking at how we monetize our games and forecast our games. So it's kind of, it was a very different role, but it was a real positive to go from that side. And it's interesting sort of, because I've done this a lot. And again, what I do now is where you're working with those founders on that journey, and they're asking me like, what's this going to be like? Because you kind of have a focus and say, well, this is great. Like an exit is the thing we're ultimately aiming for. So that's a success, but it's also this, your baby you've created, and it's not just about money. And things will invariably be different the other side. And so you need to acknowledge things will change and you won't have as much autonomy, but actually if you should be choosing the right home, not just based on the financials and the fact that actually this is the better place for, you know, everyone to go to. But then from the CFO side, like the reality is, particularly if you're in a PE-backed business going to a large corporate, your role may not exist anymore, not in the same way. But again, if you've been through that exit, you've got fabulous credentials, you can go do it again, or you can take a larger role. So it's kind of, there will just be change.
Yeah, no, absolutely. And I guess it should be expected, but change for the better by all accounts. And yeah, it'd be good just to kind of have an understanding of what you're up to now then, Steve, because I understand you started Level Up Partners. Yeah,
that's right. Yeah, so I guess it's a backdrop to, so I love being part of Epic. It's fascinating, but kind of for me, my real passion's at slightly earlier stage business where you're kind of like, you're working intimately with the CEO and you're kind of helping that journey. I think the flip side to it as well is there's an awful lot of, particularly in the games industry, companies out there that they don't have that commercial support. So, you know, they're looking to do a fundraise or they're looking to sell their business, and you know, it doesn't make sense to employ a full-time CFO, but actually could they draw on sort of my support? And so, yeah, started beginning of the year, and it's been exceptionally exciting. So typically it'll be working with VC-backed businesses. It's also some PE-backed businesses as well. But then actually sort of helping them, you know, on that journey, various things. So how do they scale, looking at commercial deals, but then actually when you're going to do a fundraise, like working through that process, what it needs to look like, again, translating the strategy and vision into financial numbers, and then through the process. And so it kind of, I guess it takes each of the learnings from everything I've done before. But again, it's like just great to get a real snapshot and kind of share sort of the experience I've had with various different businesses. Yeah,
no, absolutely. It sounds really exciting. And I look forward to seeing how you guys grow over the next few years. I'll be keeping an eye on it. Yeah. Brilliant. Look, I think we've touched on a lot of bases here. It was really good to understand your journey with Ember, and then of course with Mediatonic, Tonic Games, and Epic. I think we've had a few questions come in via the Q&A and also Twitter, which would be good just to kind of touch on before we leave. So Ben has come up with an interesting question here. He says, what did you find was the biggest jump or learning curve when moving into a CFO/#1 role from that Group FC position that you originally had?
Yes, yes, a good question. I think it's kind of, it's that broader commercial, like actual practical impact on the business. Like, I don't know, perhaps I look back now on certain things I did as a CFO, and you're like, so as financial controller, and it's almost like it's one step of the process. I've done some really interesting analysis that this country isn't as profitable as this other one, and then you kind of like pass it to the CEO, and you're like, great, but then you almost like get to it, you're like, but what is, like, are we actually going to do anything with this? That's lovely, but is that just because Colombia doesn't earn as much as Brazil? You know, something like that. And so it's kind of almost in everything you do, it's like, this is great and really interesting, great analysis, but you've actually got to, like, how can we drive the business forward with this? Like, how has this actually got a commercial impact and value? And so it kind of, that was quite a quick learning. I was really lucky at Ember. The sort of 3 founders were really commercially aware. So they've been running businesses for a number of years, and, you know, like 15 years older than me, and kind of, you know, very much helped me on that process. I just turned 30 or so. So it's kind of much those bits where they're like, that's fine, Steve. Like, but next time, tell us what it means. And so you learn quite quickly, and sort of, you then really have to focus on it. But, you know, that was a steep learning curve, but then quite quickly, like, actually, this is what matters. And it's also just working out what really matters for the business. And so you can almost get lost in, let's get a great expenses policy, but you're like, this doesn't matter. It's a 20-person startup. Like, just get some infrastructure. The CEO and the business doesn't care about that. Focus on which is really going to drive things. And so that was kind of, fundamental.
Yeah. No, I mean, it's a very big jump to take, but you know, if you're up for the challenge, it sounds like that's some good advice to help you there. Another question, which is good, has come in. How difficult is it to strategically change the investor/business plan when you discover a product with market-leading potential, such as Fall Guys?
Yeah, not too difficult when it's in that situation.
Yeah, I mean,
to be honest, because it kind of leads itself. I guess what's harder is when you don't have something as categoric market-proof as what Fall Guys did, but you're on the verge of you're creating this, and kind of like, how do you really steer and say this is a thing we should be investing in? And you're going to have a lot of different stakeholders. It depends on the relationship. Sort of, again, I've been fortunate the CEOs have been, you know, exceptionally smart and switched on with kind of the marketplace trends and everything else like that. So it doesn't take lots of convincing. I think kind of where the CFO comes in, and kind of where, you know, like, where can you really differentiate yourself from other people in the business? It's kind of like translating what everything we're talking about to commercial numbers and having robust support for it. So it's great if everyone else is, you know, I guess normally where I'll be, you should have a better person who understands product more than me, whether that's a CEO or head of product, whatever. But maybe they're missing a gap that I can actually turn this into financial numbers and say, well, here's other examples of it. So kind of like really trying to support that case. And I think you can't be so hell-bent and blind on like, this has to be right. You have to just say, this is my view, and kind of read the room and sort of make sure you're sort of sharing the case for what you believe in with data, but, you know, people will be coming on a journey with it.
Yeah, absolutely. Another interesting question is coming from Harry. So thanks, Harry. It says, what were your key understandings that you wanted to get out of each of the due diligence processes that you were involved in?
What was the understanding I wanted to get out of the
or that you were looking to achieve from undergoing some of the key DD processes that you did?
Yeah. So I guess like this probably means not fully like I wanted the company to be sold, and so you kind of like we're on the receiving end of the DD, and so you kind of have people
that's true.
like slightly different ones in corporate finance. Maybe I'll quickly come onto that, but like from our point of view, we just want to make that as clean and seamless as possible, but be really forthcoming and open, so they don't think we're hiding stuff. So the tactic I'd always have is over the top. Like if I knew there was an issue, so transfer pricing, our cross charge to Spain is not quite the right rate, I'll tell them from day one. I just want them to get this trust that I'm not hiding anything. I know where the risks are, and I can be forthcoming with some of them, package them up. There's some other things which may be more subjective that I know you could perceive a different way, and if they haven't seen it, that's not my issue type thing. But it's kind of, they're trying to be very forthcoming with things which are factually not where I think they should be. And so they're kind of, from my DD point of view, it's like building that trust. So actually they back me as kind of someone financial, but making sure we get through that process. That's a bit that's on me. The commercials might fall over in terms of buying the company, but if something falls over in the DD side, then that's on me. So that needs to be right. The objectives from the other side, when you're in corporate finance, it kind of, you are trying to find a risk for the investor because they're looking at this. And it, again, like learning over time, now having been a CFO, like at the time, it's almost these generic things like, here's a load of risks. And you just and it's like, well, they're never going to happen. But our job was to flag them all because, that's what we're there to do. And so you're trying to flag that, again, weight them and say what's more risk. But then in hindsight now, being a CFO, when I've been sort of, I guess, buy side with Ethic, then you're kind of like, okay, that is a risk, but who cares? Like maybe we want to hold something back because of the potential tax risk of HMRC, but actually this is the bigger issue here, and really honing in quickly on that's the thing I care about, and that's to make this whole commercial deal not work if that became true. And so that having that focus there.
Yeah. Okay, cool. And I guess one last quick question. Gus has asked, can you recommend any books or podcasts that might have helped you kind of get a bit more insight into what you were going through in the exit processes?
Yeah, it's a good question. Like there's kind of, there's lots of podcasts I listen to, but they're very game specific. So kind of unless, there's one called Deconstructor Fun. If you want anything on games, then that's a great one for financials. And then in terms of books, there's kind of various I've read, and they might be slightly cliche, but From Good to Great, and I think it's 0 to 1. Like some of those are great. They kind of almost just talk through that. And The Hard Thing About Hard Things as well is another one where kind of people have basically been through this, which I'd read before, but even afterwards I've read them, and then it's quite interesting. Like, oh yeah, I can really relate to that, or I didn't do that. And so there's some great books out there.
Cool. Yeah, I'll have to check them out myself as well, just to get a bit more of an understanding of what you've been through. But nonetheless, very exciting stuff, and really appreciate you coming on today and giving us a